What is up, guys? Misha here from Beyond the Huddle, and welcome to another video. And in today's video, I'm going to be going over the COT report, not for Bitcoin, but for Ethereum. So this has been available since I think about April of last year, but I have not really been paying attention to it. We wanted to see how the data was going to develop so we can study some historical data and see how we want to use this report. And it turns out that it works pretty much the same exact way as Bitcoin, as you guys will see here. Let's go ahead and go to the trading store website. And for those of you that have absolutely no idea what the COT is, it is the Commitment of Traders report, and it is published every single Friday. Now, when it gets published on Friday, the report is from Tuesday to Tuesday. So for example, here you can see that this report that was published on Friday of last week, which was the 14th, is as of the 11th, right? So which was the Tuesday of last week. Now, what we get in this report is the positioning of all the entities that are trading in the futures market, but these are entities that have been trading a certain amount of contracts, right? Once you trade a certain amount of contracts, then you have to report your positions. And you guys can see that there's also the non-reportables, which are pretty much the rest of all the other traders that are not trading enough size to be reported right here. So you can see that is broken down into dealer, asset manager, leverage funds, other reportables, and non-reportables. The one that we're interested in is the asset manager one, which is the institutional money. We want to follow the smart money. Now, I know there's some people that do follow the leverage funds as well. Now, I do look at the leverage funds when it comes to other markets like the FX market, but in crypto, we have found that following just the asset managers has been the best way to go about using this report. And you guys have seen us use this over and over again on Bitcoin on a weekly basis. You guys seen all of Ralphie's videos on Bitcoin using this data, right? So what we get is their positions, the number of position, the percentage of open interest. So for the longs, right? Then we get the number of traders. Same thing for the shorts. You get the number of positions, percentage of open interest, number of traders, and we get the spread, which we do not use. So what we're very interested in also is the long versus short percentage. And you guys can see that right now they're mostly short. They're about 86% short. Then what we want to look at is the net position. And you guys can see this started trading in April of 2021. So April of last year. You guys can see this right there. So after their net position, we want to look at the longs, individual long positions, and then we want to look at the individual short position. So looking at just one of these data points is not enough. You want to look at all three of those data, well, all four of those data points, which are the longs, the shorts, the net position, and the percentage longs and shorts. That's what's going to give you the full complete picture. Now, we could look at this data here and analyze it all here, but we're not going to do that. What we're going to do is we're going to jump into TradingView. And what we did is we added the ability to see the Ethereum data on our COT indicator. So right now, I'm looking at the Ethereum data here, and this is the percentage longs and short that I put here. And then here I put the net position. So let's switch this to net position. And I could have added more and added the longs and the short underneath here, but I didn't do that because if I do, then we're not going to be able to see the candles. So what we're going to do in this video is, as we need to look at the longs and the shorts, we'll just switch the net position one to either the longs and the shorts as we need it. Okay, so let's go ahead and let's get started with the breakdown to kind of show you guys how this indicator and this data, not the indicator, the data itself, can actually help you out in understanding exactly what the smart money is doing on Ethereum. So, and this is for the futures market, guys, right? So what we want to look at is we want to look at times where the percentage longs or the percentage short goes above the 60 and 80% lines, okay? These are the thresholds that we look for. Whenever we go into these thresholds, you know that the market is heavily one-sided. At least the asset managers, their positioning is heavily one-sided. And whenever that happens, the market usually goes in that direction. And you guys can see heavily one-sided here. And you guys can see the market was going down throughout this time. Now, notice what happened. Well, throughout this time, the market, they were heavily short. And you guys can see that with the net position, you can see it was below the zero line, and once the average started plotting, you can see that we were below the average, right? So everything was pointing towards being short. Now, notice what happened right here. the percentage longs and shorts did not change. It stayed the same on this candle right here. But notice what was happening with the net position. It was going higher. Now, if we go into this and we look at the individual longs, you'll notice that nothing happened. They stayed flat. But notice what happened to the shorts. The shorts, boom, we had a decrease in shorts. Now, the market started to rally, and notice what was happening as the market was rallying. They were distributing their short position. The shorts were going straight down, and that was allowing the percentage longs and short to start to flip. And now we were getting the percentage long increasing and the percentage short decreasing, confirming that we are in fact in an uptrend and that we wanted to be buyers during this time. So you guys can see how this type of data can allow you to see exactly what the smart money is doing, so you can ride their coattails. Look at what was happening with the net position. It was going above the average and on its way back above the zero line for them to go net long, which they hit right here. So as they hit net long, well, they hit net long way before that. They hit net long around here. They were already net long, but they hit our threshold, the 60 to 80, where they were completely one-sided right here. But you guys can see the market has started dipping right here. Right? We were getting a dip right here. And notice what was happening with the net position. Net position started to go down, and then it kept going down all the way down until here. Now, the longs and the short percentage stayed the same. They pretty much stayed the same. Notice what was happening with the actual longs, stayed the same. Now look at what was happening with the actual shorts. Boom, shorts are going straight down right here. So as the percentage longs and shorts was staying the same, the shorts was already going down. So that was tipping us, telling us, hey, shorts are going down, they're going below their average. There's very likely going to be, this was very likely a reversal, because once you got the data already on this week right here, that's when you knew what had happened during that time. So you know, okay, well, this is most likely, if you thought this was a reversal, okay, I'm getting confirmation that I was probably right. And then the following week after that, you get even more confirmation, because then the shorts percentage goes completely down and the long percentage goes above the 60%, which kind of confirms that you are back in an uptrend. And look at what happened to the individual longs. Look at that. Individual longs went straight up. And if I look at the net position now, same exact thing, the net position was going straight up. And you can see that this continued, net position continued to rally. And then all of a sudden, we get into this area where we're 100% long, right? So we are completely one-sided. And the market stays one-sided for all this time. Look at this, all this time, all the way up to this point right here, to the very high, we stayed one-sided. But look at what the net position was doing. It was starting to decline a little bit, right? Now, if I look at what was happening with the longs, look at this. Same exact thing. The longs were declining while the shorts weren't doing much, right? The shorts were kind of staying the same right here. But then the longs were the ones that were declining. And we can see that right here, right after this week right here, as this was starting to come down, which is the percentage longs and the percentage shorts were starting to come up because of the longs starting to decline, as we just saw. The following week, we get a massive increase in shorts that go back above their average. And then look at what happens ever since. The shorts keep increasing. The short percentage increases. The long percentage decreases. And like I already said, the short kept increasing. And look at the market's been in a downtrend the whole entire time. So you guys can already see how powerful this data can be if you know exactly how to use it, if you know which group to look at. Because if you're looking at the wrong group, you're not going to be helping yourself. You're going to confuse yourself more than anything. You want to be looking at the right group of traders, which is the asset managers. They're the institutional traders. They're the smart money. And then you want to look at the complete picture. You don't want to look at just one single data point. You don't just want to look at the net position or just the percentage longs and shorts. You want to look at everything to form a complete full picture of exactly what's going on. And that's going to allow you to have a lot of confluence in your trading, because when you're expecting markets to reverse at certain areas, and then couple weeks after what you thought was a reversal, you see that the COT report starts to confirm what you were saying, then that adds confluence and confidence to your analysis, and you're able to trade a lot better using the data than if you weren't using it. So that's going to be it for this video, guys. If you enjoyed the video, if you got value from it, make sure to give it a thumbs up. Make sure to subscribe to the channel and press the notification bell so you can get notified every single time we drop a new video. And if you guys are interested in learning exactly how we trade, you're interested in interacting with us in our Discord server or getting access to these indicators, make sure you check the links down below in the description. There's going to be everything you need down there. And yeah, guys, that's pretty much it for this video. I will see you all in the next video. Peace.